Yeah, this side Anshuman Rao and welcome back to another video. So as you can see, we are facing a very bearish scenario in the current markets over here, and the Dow and the S&P 500 futures and basically the American market is lost over 3 point something trillion dollars in the in the month. I think in the only in the month of March last, the month of March is going to end, and in the month of March the American markets have lost around $3 trillion plus money, if we total down. And we have, as a trader, our job is to, just during this bearish scenarios, we just have to short the markets. We just have to go with the trend, and we just have to short the markets, and we have to just, focus on making money, and whatever happens is secondary. We just, as a trader, we just have to, focus on money, and we just have to focus on the trend, and we just have to focus on our entries, and also the most important thing, we have to focus up on our risk management protocols. So, keeping these four things in my mind, we I think in this month, we out of 10 funded accounts, we almost cleared 8 funded accounts, 7 to 8 funded accounts, and the rest 2 to 3 accounts we failed because of our revenge trading, over trading. And I have explained you the reason in the videos which I made previously, and I will be posting down the links in the description box, so make sure to check it out. And before moving into the video, I would also like to remind you that there is a code down in the description box if you want to purchase any funded account using the funded next platform, the prop firm basically. And if you want to basically fund yourself, you are in the journey of getting funded, you can use this prop firm. It's a very good prop firm because they have this amazing policy of $1,000 extra if your withdrawal doesn't arrives within 24 hours. So I think nobody in the prop firm industry provides this facility, so you can go check it out, the funded next platform, and you can buy your desired funded plan, and you can use the code down in the description box to avail some extra discounts. So without wasting any time, let's jump into the video. So basically, in the last working day, the last market day, we shorted the DJIA, which is the Dow Jones Index. So we shorted the Dow Jones Index, and in the previous video, I already shared my plan for the Dow Jones Index. I had broken down the SPX futures trade, and if you get some time, you can make sure to check it out also. I will be posting down the links below. And so basically what I did was I took a trade in SPX 500 in the last video, and I also posted the the whole scenario, the whole plan, that for the next day, that which trade I am going to plan. And basically this is the account in which I am trading, which is the initial balance $50,000, and we are currently up at $1,983. So the profit target is $2,500. So our goal is not to reach the profit target specifically. We will be reaching the profit target, but slowly, smoothly, and gradually. So our main focus is to enjoy the process. That's it. So what our plan was, so before, so this was the trade in Friday. So basically I will be breaking down the trade. It was a 5 hour trade. So basically, rare, this is the rare number, this is the rare R multiple. You will, you basically get this moves very rarely. You basically, traders capture this move very rarely, especially me. So basically what happens, you know before breaking down into the trade, what I will be telling you first, that how I planned this trade beforehand. So I knew that the American markets are in a very yeah, they are facing a huge sell off. So at, I guess, Thursday, on the day which I closed my SPX futures trade, and in that day, on Thursday, basically the day before, I placed this wonderful trade. I planned that, in the left hand side recent price action, in the latest left hand side price action, we are seeing a very huge gap over here, which has to be, there are higher probabilities for the price to fill this gap over here, which is, about 160 pips. So you can consider it as a 160 pip, clean range. You know you can't even say it a clean range, because you don't have, clean, you don't have any candles over here. This is basically a gap, and there are, a gap has to be filled. The market has this theory that it has to fill the gap, anyhow. It There is a probability, if, in the latest price action on the left hand side of the chart, if there is a gap, there are probabilities of, 86 to 89% of the probability that the gap will be filled with a complete clean move, and other probabilities of that consists of filling the gap with a move which is not consistent enough, means the other 10 to 12% of the probabilities will be like that, like, we will be breaking down. Then when we are, when the price is, we don't see, in the, basically in the rest 10 to 12% of the times, when the gaps will be filled, but not in a consistent way, like this, within one candle, within one huge volume kick in, it just filled this gap over here, and this is what consistent move looks like. But in the, what I'm talking about is the inconsistent moves, the inconsistent gap fills. So, but in fact, all of this, what I have said just now, the gap has to be filled. This is a market theory. I don't know, how, what is the concept behind this, but whatever my wisdom, whatever my trading wisdom, I have built during the last 3 years of trading, you know whatever gap I have seen has been filled by the markets. So this was all about the gaps and gap fills. I will be also covering this topic in my, latest academy, which I am launching soon. So within, I guess, in the end of the April, you will be seeing my academy. And yeah, if you want to have the access of it, I will be also posting down the links below when I will be launching those, and also I will be posting down the Discord links, you know of my Discord servers, where you can create your own community. You can discuss about the trades, you can discuss about the P&Ls, you can discuss about different types of strategies, newses, etc, etc, etc. So let's break down this trade. So on the day of Friday, what we got to see was, on the day of Friday, before the market open, we got to see that gold is making new all-time highs. And as you can see, I guess this was a trade on Thursday. We also took a trade the day before. We took the US30 trade on Thursday, on the day when we placed the SPX futures trade. We also uh, traded gold, and that was also a TP hit. Basically, it was a 1.5 hour trade, as you can see here. So it was also a TP hit. Basically, it was a counter trend trade, but it was successful. But the thing is, gold was making new all-time highs on Thursday also, and also in Friday. It was, completely, the bulls were so powerful that they made, I guess, a enormous, huge all-time high. So what does this mean? And I have also read some articles that investors are losing confidence in the American markets for the time period, for this time period, and they are losing confidence in the American markets. That's why they are withdrawing their money from the American stock market to, this commodities, to invest their withdrawed money into the commodities section, for example silver, or gold, platinum, and etc. That's why the gold is hitting new all-time highs. So basically, what does this mean? Gold hitting all-time highs means the withdrawed money is entering into the gold. And where did this withdrawed money is withdrawing from? Withdrawing which asset? Basically the American stock market. So American stock market has to go down. and has to face the even a greater sell off. So for the Friday I was already prepared that I will be targeting this gap, and also my preparation and my conviction became even more stronger when gold kept on hitting all time highs in the Friday. So basically without any hesitation I placed my trade. Basically I placed a trade which was this trade over here, but I didn't mark it because within as you can see this green candle over here, and you can notice this wick has gone till here. So basically you can consider this as a liquidity sweep to take out all stop losses above this high of this candle, and after taking out all the stop losses over here, the market gave an amazing bearish rally. So basically what happens is, I placed a trade over here in the opening of this green candle, and I got stopped out. So you know but I was highly convicted, and I was highly you know um, I was highly confident in my trade that yeah, market is going to go bearish today, because the thing is the gold is kept on hitting all time highs, and I also already knew that yeah, it was a stop loss, it was a liquidity sweep. So basically what I did was, okay, I didn't wait to let the market hit my SL. I just exited whatever the PNL was. I didn't care, I just exited without seeing, and I re-entered the trade on this spot over here. As you can see, if I will zoom out, my entry over here was somewhere around this week of this green candle, not in the opening of this red candle. Instead my entry was, again, this was a re-entry trade, by the way. And yeah, we just continued to push down, and with the market open, I just was so convicted, and I had so much confidence that okay, if I would have lost this trade, it was still uh, how much pips am I risking? I am just risking 52 pips in exchange of 266 pips. So basically it is a 5 hour trade. Basically if you put it into perspective, then I'm risking $1 to win $5, which is it's a very good deal. So yeah, this was all about the trade. And for transparency purposes, if we jump into the trading history over here, so if we jump into the analytics, so this was all for the day over here, and this was all the trading history. As you can see here, in US30, everything was in US30, as you can see. So this was the trade over here which I was talking about, the $1,700 loss, which I exited in without waiting for the stop loss to get hit. And after this trade I again re-entered into the trade with with the trade which I just broken down. That was the re-entered trade, and this was the re-entered trade PNL over here. As you can see, this is the all PNL of that trade over here. And if we somewhere around, if we sum it down, and if we put it into perspective, then I think it is somewhere around $1,900. So basically we closed the day at positive, not much positive, because this was a useless trade, because the thing is I just placed this trade. This is a useless trade. I just uh, put I take all the blame for this loss, because we would have made you know a significant amount of money if we didn't place this trade. Because the thing is, the mistake behind this trade was I just executed the order out of FOMO, and before the market open, in the pre-market session, I just placed this order where we don't get to see much liquidity. We usually get to see liquidity sweeps, and during those times I executed this order. I took this trade, which turned to be a useless loss, unwanted loss. But yeah, we learn and we grow. So as you can see, this is the profitability meter. We are pretty much green, and The average RR, the average risk to reward ratio is 1 is to 2, which is, yeah, it's good. And if you see the analytics, so we are basically, consistently growing. And the most profitable instrument that is basically the Dow Jones index. So yeah, this was all for the video, guys. Hope you liked it, hope you enjoyed it, and hope you have learned something from the video overall. And make sure to check the code down in the description box if you want to purchase any funded account, so in funded next platform. So make sure to use that code below in the description box to avail some crazy discounts. So this was all for the video. Anshuman Rao signing off for today. Peace out.